Hi, ladies and gentlemen. Welcome to Dominion Wealth Zone. Welcome today to another telecast. Today, I'm going to be talking about 7 assets that you must have. 7 assets that you must have. I'm not saying you've got to have everything today or this year, but you need to be working towards having them. It's very important for you to have these assets. These are assets that people who are financially stable, that's what they have. And if that's what they have, then you need to have that too. And I'm going to start with the one that I feel is much more stable. Then I'll go to the one that is a bit volatile. So 7 assets that you must have. So as you begin to make your little income day in, day out, make sure you are investing in these assets. When you look at this list, there's no car there. A car is not an asset. A car is a liability. Although when you use your car for business, it could be an asset, but a car ordinarily does not appreciate, it depreciates. That's why I'm not putting a car into this list. So a car does not appreciate, it depreciates. There's a sort of car that appreciates all the vintage cars, old cars, 1940, 1930 cars. If you can lay your hands upon them, that's very good, but I've not put them in this list. So I've just pulled the ones that I feel you can lay your hands on ASAP, and I've got 7 of them. 7 assets that you must have. Number 1 is real estate. About 95% of millionaires in this world today have investment in real estates. The richest footballer in the UK at the time, this guy used to play for Liverpool. You would think it's David Beckham. It was not David Beckham. You understand? This guy has a lot of houses, properties in the UK. I was reading about Anthony Joshua recently, and he's invested substantially into real estate. That's how to tie your money down. Real estate is the only estate that is real. Is the only estate that is real. Or is a main estate that is real. So real estate is very important. Although real estate could have high entry cost. However, there's something I want you to know. Real estate might cost 200,000 or 300,000 for you to buy, but initially you only need about 5 or 10% to start if you're going to buy your first purchase. Now, if you're going to buy to let, then you need about 25% or 30%. And if you have a very good portfolio, some banks or lenders will allow 20%. Imagine you are doing a business of 1 million, and the only thing you have is 250,000, and somebody gave you 750,000 for you to use for 20 years or 30 years. I want that kind of business. You can only get that in real estate. However, if the market crashes, it could affect the value of your business, not the income that you get from it. The value could go down, but one thing about investment is as long as you have not sold, you have not lost. So if the value goes down, it's a matter of time, the value will go up again. I'll give you 5 to 10 years, the value will go to where it was before and even higher. Another thing about real estate, another caveat is, if you want to sell it, you might not be able to sell it quickly. Real estate is not like the other asset I'm going to mention that you can just sell straight away. For you to sell your real estate, it takes a process, and the minimum process is at least 3 months. You understand? So if you're looking at assets you want to be able to dispose quickly, it's not real estate. You understand? But the asset that appreciates more in value, I'll tell you, is real estate. Number 2 asset that you must have is stocks and shares. Stocks and shares are you buying into established companies. And I always talk about premium stocks and premium shares. We'll talk about stocks into AI, into technology, like stocks into Google, into Amazon, into Meta platform, which is Facebook's, stocks into Nvidia, into Palantir. We're talking about stocks into S&P 500. Was talking about you investing your money into stocks and shares, or these are very important. Stocks and shares could be volatile in the short run. The market can cause some losses. There could be shaking in the market because of news. Early this year, Donald Trump came with his tariffs. The stock market was in turbulence, but everything is stabilized now. I remember a few of my mentees called me when the stocks and the shares were going down. The S&P 500 went down, lost about 15-20%. People were scared, and I told them, I calmed them down. I said, this is how the market moves. Now that everything is down, it's the best time for you to buy. Everything will go up. Actually, I'll tell you the truth. I didn't know it was going to go up within 3 to 5 months. I was thinking it was going to go back up in about 9 months. I tell you, in 4 or 5 months, everything is up. So if you have invested then, when the thing went down around February, March 2025, you'll be smiling to the bank now. So stocks and shares. Number 3 asset you must have are precious metals and commodities. Precious metals and commodities are gold, silver, platinum, and oil. The prices also could be volatile, and I'm going to say something here. When I mention oil, I'm talking about crude. I mean oil, petroleum, oil in general. But I'm going to say something for those of us who are from Africa. You can get a benefit here. If you invest in precious metal, there are 2 ways which you can invest in precious metals. You can buy stocks of gold, of platinum, of diamond. You can buy stocks of them, and you can buy gold, physical gold, and keep it. I'm not going to encourage you to keep physical gold because it could be stolen, except if you have a considerable amount and you go to keep it in the gold vaults. There's some gold vault. There's none in the city where I live, in the area of Yorkshire where I live, but I know some gold vaults in London. You buy your gold, you keep it there, and they keep it for you. They charge you a little amount. It could be there for 20 years, 30 years, 40 years. If you pass on, you put down your will, the beneficiaries of your will can get it. So, and I'm going to add something to precious metals and commodities. I'm going to add jewelries. Jewelries too, they appreciate in value. I'm talking about gold. If your jewelry is gold and you buy a wristwatch that's made of gold, or some wristwatches that are about 25,000, 30,000, Rolex wristwatches, because you can't just go into the shop and buy Rolex, real Rolex. No, you have to order it. And and there's a number of Rolex they have to produce in a year. So when you buy a Rolex, they appreciate in value over the years, but you have to keep it safe. Now I talk about oil. One thing I know about oil is in the season where they sell oil. Now I'm going to go to Africa. I'm from Nigeria. If you go to buy oil in Nigeria from the farmers where they sell it, at the season when they produce oil is very cheap. But when the oil is out of the season, when it's off season, the prices go up. So you could buy it from the same farmer if they are trustworthy, keep it there, leave it there, and when it's off season, sell it to the same farmer or the producer rather will help you to sell it. But you've got to do your own diligence. Don't do it because I said that you do it. Do your due diligence and work with people who are trustworthy. Number 4 asset you must have is agro-business investments. Agro-business investment. When I was in Africa, I used to involve myself in a lot of agric products. I used to have a poultry, because agro-business is very, very good. Having a poultry or going to feeds or going to mechanized farming is very, very good. If you have the resources, if you can do it anywhere you are, it's very, very good. However, agro-business could have its own downside. Number one, you need to be patient. If you're going to agribusiness, there are natural disasters that will affect you, and it's a long-term investment. I need people who have land and planted coconut or palm kernel on their land, and after a few years, harvested them and are smiling to the bank. Please do your own due diligence. Number 5 is high yield investment and savings account. High yield investments and savings account. Putting your money in the bank is a waste of money, but putting it in a savings account, high yield investment and savings account, is very good. One that I'm going to recommend to you is a Vanguard Life Strategy account. I go for the 100 Vanguard Life Strategy 100. I don't do the 60-40 or the 20-80. I don't do them, or the 40-60. I go for 100. In other words, 100% of that money goes into shares and stocks. None is into bond. Bond is less risky but less profit. Shares is more risky, high risky, and high profit. In the past 10 years, the Vanguard Life Strategy has had a return of between 10 to 12%. Where will you get that? Per annum. 10 to 12% per annum in the last 10 years. Where will you get that from? Nowhere. So therefore, high yield investment and savings account. And you can also put ISA in this bracket. ISA is individual savings account in the UK, and the US is called the Roth IRA. This is the account that is not taxed. So everything you get from this account, they are not taxed. Number 6 is treasury bills. Treasury bills. Treasury bills is you buying into the central bank of your country. Like the Bank of England sells treasury bills from time to time. And one of the ways where treasury bills are good is that it's like you are lending your money to the Bank of England. You're saying, Bank of England, take my money and give me some returns. So you're lending your money to them. And when you look at countries that have not had any wars in the past 100 years, like England, treasury bills are a bit more safer. Although, if the bank cut interest rates, which they have done, I think last month and this month, you might have to lose a certain percentage of your treasury bills. But all in all, it is still a good form of investment. Finally, and number 7, I just feel I should chip this in for you, is to invest in premium cryptos. You look at what I said, premium cryptos. Premium cryptos are Bitcoin, Ethereum, and co. You can put Binance coin into that. These are crypto that have been tested and trusted, although no crypto is 100% trusted. But you can be sure because Bitcoin is now being institutionalized. That is, they are putting institutions' money into Bitcoin, and it's a matter of time. It's going to be widely accepted all over the world. So you can put your money into premium cryptos, but I want to advise you, don't put more than 2% of your investment into that. As a matter of fact, if you can do 1% of your whole investment, that's great. So don't forget these 7 assets that you must have in order to become a millionaire. I see you on the other side of success. Don't forget to like, to share, and to subscribe to my channel. Thank you.